Hey guys, we've got a great doubleheader for you today. Mallory McMorrow announced she was running for Senate yesterday, so I'm planning to have her on to discuss the campaign and more. And then I wanted to bring in somebody who had real expertise on what's happening with the markets and the tariffs following yesterday's Liberation Day announcement. And so we brought in Tracy Alloway, who's a very insightful observer of what is happening in the markets. She writes a newsletter and does a podcast with my guy, Joe Weisenthal. So she, I think, is going to educate us. I'm going to have more economy experts on in the coming weeks and months because that is what Donald Trump has thrust upon us. And so look forward to that. And we'll probably have Tracy back when the time is right. But before we get to it, since we got so wonky and nerdy in that first segment, I want to emote with you guys for a second. It is fucking insane that we are here with regards to the stock market and the economy. I mean, as I am taping this right now, the NASDAQ is down 5%, almost 6%, really. The S&P 500 is down 4.5%. This is all self-inflicted. None of this had to happen. There is not a bubble that has burst. There is not some issue in the credit markets. There were not a bunch of credit default swaps being bundled. This is not the Big Short. This is not a global recession. This is not a pandemic. It is just Trump chaos. Any pain you have in your retirement account or your 401k right now is only due to Trump chaos. If you're one of the people who are going to lose their job over this, it's only due to Trump chaos. And here's the thing. Trump's whole career has been failures like this. This was utterly predictable across every metric. We screamed it from the rooftops here at the Bulwark and elsewhere. He bankrupted a casino. How do you go bankrupt in the casino business? Like this man, Trump Steaks, Trump Airlines, Trump Water, fail. He's failed at everything. He was a horrific businessman. He was a good marketer. And we can be honest, he's been a pretty good political manipulator. That's what he's good at. He's a con man. He's good at conning people. But we are all about to experience unbelievable pain, unbelievable economic pain, because people who should have been smarter than this went along with the con. People who should have known better, who should have known Trump for who he is, went along with this and decided to take this risk because they thought maybe they might get a little tax cut, or maybe there might be a little regulation cut that might help their business. Well, guess what? All of your fucking businesses are going into the tank right now, and it's hard to see a way out. Tracy Alloway will talk about that in a little bit more dispassionate way up next. She'll educate us, get us smart on what's happening. Stick around. Hello and welcome to the Bulwark Podcast. I'm your host, Tim Miller. We are on the morning following Liberation Day, and we have been liberated from the value of our 401ks. I want to talk about that and much more with one of my favorite finance journalists, Tracy Alloway. She's a co-host of Bloomberg's Odd Lots podcast, alongside the stalwart Joe Weisenthal, and also author of the Odd Lots newsletter. How you doing, Tracy?
I'm good, thanks. There's a lot going on, huh?
Busy morning. Thanks for taking the time with us here at the Bulwark. I'm just pulling up my little Bloomberg account here because we're right off the top. Not looking great. Craters is the word you guys have got up here on the website.
That's right. And you've made this tricky by recording at exactly when the market actually opens. But yeah. I think at this point, we all know the direction is going to be down, right? The announcement in the Rose Garden, Liberation Day, was a lot worse than a lot of the professional economists and analysts were expecting. And this morning, if you look at my inbox, it's just a flurry of notes with the words recession and stagflation in them. Everyone is rushing to revise their forecasts for the rest of the year. Most of the notes that I've seen are forecasting a dip in GDP, so that would be a recession. And a lot of them are ratcheting up inflation outlooks as well, going to as high as 4 or 5%. That's a pretty big deal, given that we've just been seeing inflation actually come down.
It is quite a big deal. And I want to get into kind of exactly what the announcement was at the tariffs and the kind of big picture economic stuff. But I just have to react to the fact that your friends in finance world, your sources, the people you talk to, there did seem like a level of surprise. And over on CNBC, after the announcement, they said it was the worst of worst case scenarios. Obviously, the market is reflecting surprise. As you said, by the time this posts, things might be different. But NASDAQ opened down 4%, Dow down 2.5%, S&P 500 down 3%. Why are they surprised, I guess, is my question. They could have just listened to Trump or listened to the Bulwark or listened to Newsmax and gotten the real news from Newsmax. I mean, it wasn't like there was a secret here. I mean, he said it was his favorite word. He kept promising it. Why didn't they believe him?
A couple reasons. I think it's a totally fair point to make. I would say the main reason when it comes to finance professionals, it's really hard for them to imagine someone in power doing something that is so clearly against the grain of, canonical economic thought. I don't think there's a single seriously taken economist out there who actually thinks that destroying global trade is going to help the American economy actually go up.
So they didn't think he could possibly be this much of a moron. It was unimaginable to them that he could be that dumb.
The other thing I would say is that's the case for a lot of non-professional armchair economists as well, right? Yeah. Even Trump supporters. When you talk to them about, well, what do you think? Trump wants to impose these massive tariffs. That seems like a big deal. They'll say, well, Trump, he just says stuff. He's not necessarily really going to do it. And then lo and behold, he actually does it. And even now, after he's done it, there's still plenty of people who are arguing about whether or not this is just a negotiation tactic and whether or not some of the tariffs are going to come right back down.
Yeah. Well, I guess I had the benefit of having to obsess over Donald Trump. There's a lot of downsides to that, having to know a lot about Donald Trump, having that take up space in my brain. But, one thing that you could realize is he bankrupted basically everything that he ever did. He bankrupted a casino, and he is a very good PR person and a very good media person. He was never really that good of a manager of businesses. And we're seeing that now. But I guess maybe they all thought since the first term had 3 good years, I guess that was it. That's the rationale, that he didn't do it the first 3 years of the first term.
Yeah, I mean, the media story is strong, right? And by the way, if Trump is living rent-free in your head, maybe you should impose a 30% tariff on that. That's one idea.
How would I collect that? It's kind of similar to, I don't know, did you see his bleat the other day where he said that we are, the fentanyl smugglers are going to have to pay tariffs, tariffing the value of this. So whatever vehicle he uses to tariff the fentanyl smugglers, I'll use to tariff him, I guess.
That's right. It's all very confusing. And I got to say, when you look at some of the tariffs that have been unleashed, there are weird things in there. I was just writing about this, actually. There's a 30% reciprocal tariff imposed on Nauru, which is this tiny island in the South Pacific that mostly exports fish and pig meat and some phosphates, but not that much anymore, to the rest of the world. Even if you think this isn't necessarily an economic tool, it's a political tool, it's a tool of diplomacy maybe. The question is, what exactly do we want from a place like Nauru? I can't imagine that many Americans want to become phosphate miners. America's fishing industry has been in decline for a long time. And in fact, there's other things the Trump administration is doing that reportedly are hurting the fishing industry right now. So it's just all very confusing. And I think the big question is, what exactly do we want? When do we declare success from these particular policies?
Nauru has been screwing us for years, Tracy. You don't understand. Our leaders have been too dumb, and Nauru has been taking advantage of them. Let's talk about some of the specifics here. JP Morgan calls it the largest tax increase since 1968. James Surowiecki caught this, and you're kind of alluding to this here, but the reciprocal tariffs is a little bit of a misnomer, actually, because they didn't really look at the other countries' tariff rates. They looked at the trade deficit, I guess. So James uses this example. Indonesia exports 64% more than they import from us. So we used 64% as the baseline, and we were very generous, actually. We only did only half of that, so 32%. This is nonsense math. I mean, it's not even it's much more than a reciprocal tariff, actually.
It's all very weird. There was a lot of confusion when they released the numbers yesterday because at first no one could figure out what those figures were actually based on, to your point. And It does seem like they basically made a simple math calculation where they took the trade deficit and divided it by exports. And I got to say, like, if you look at the table, you start seeing some very strange stuff. So South Korea, for instance, has a higher tariff rate than Brazil. We have a free trade agreement with South Korea, and tariffs are coming in higher than Brazil, which actually does compete a lot with the US in agriculture. It's just weird. And then the other thing to remember is that famous billboard that Trump trotted out, that was just the reciprocal tariffs. So these tariffs are coming in on top of other tariffs that have already been imposed. So for instance, China, it's getting an additional 34% tariff, but it had 20% worth of tariffs imposed on it earlier. So its effective rate is now 54%.
Right. Yeah. I don't think you should feel bad or anyone should about being confused by this, because this Treasury Secretary, Scott Bessent, was on CNN last night, and Caitlin Collins asked him about that very issue, the China issue. They said, well, you said it's 34. So is that on top of the existing 20? And Bessent was like, I believe it is. Like he couldn't even say with confidence that, and it does turn out, yes, that it was. But the chaos is stemming from them. It felt like somebody that was, honestly, what it felt like to me, Tracy, and this is maybe outside your wheelhouse of knowing the Kremlinology of the White House, but it felt like the people even inside, they didn't really believe Trump, and they were cramming on their midterm and had to push something out before April 2nd. It's like, oh shit, he's really serious about this. We got to come up with a billboard.
This is exactly to your point earlier about why didn't people expect this? I mean, people in the administration don't seem to have expected this, right? Trump was talking about tariffs all of last year, and that's his big thing. I mean, someone pointed out earlier that he's been talking about tariffs when he was like on Oprah in the 1980s. Yeah. It's a long-held belief. And yet, we are months into the new administration, not that many, to be fair, but we are certainly a lot more months longer into his campaign, his planning for taking a new presidency. And here we are, and no one seems to have worked out the details, much less communicated them to people you would imagine are important, like Bessent.
Like the Treasury Secretary, yeah, you would think. Also, just worth noting that Belarus was not included in the reciprocal. Everybody can just sit with that if they want. So I want to get into your newsletter about the long-term effects. Was there anything else about kind of the details of yesterday that stood out to you?
Well, the other thing I would say is all of these reciprocal tariffs, they're focused on goods, right? Actual exports, things that Americans like to buy. I don't know, T-shirts, Nike sneakers, whatever. There's a component when we're talking about economic losses as a result of the tariffs. It's not just that these products become more expensive for Americans. It's also that they start to lose some of their associated, I guess, brand value. So for instance, if I'm, a teenager over in China, am I going to want to buy a bunch of Nike gear nowadays? I'm not sure that's clear. It's becoming more expensive potentially, even in China. And at the same time, that brand value is diminishing very, very quickly. So there are all sorts of intangibles, soft power that are wrapped up in the taxation of actual things.
Yeah, you're seeing this in Canada, I think most starkly, right? A friend of mine said, I'm forgetting if it was their sibling or their friend or whatever, is living in Canada and keeps sending them photos from the grocery store of how no one is buying any of the American products. Yeah. They're the only things left on the shelf because people are like, F this. Yeah. I mean, part of it's the tariff, but part of it is, like you said, the associated brand value. So you had a great newsletter on the other kind of long-term effects on this you wrote earlier this week. And there were two things that jumped out to me. One was just kind of, even if this turns out to be kind of a bluff, which just doesn't seem like to me, there could be long-term impact on inflation and prices. And also, it's going to benefit the bigger companies over the little guys. So talk about both of those.
Sure. So the thing that markets and investors hate the most has to be uncertainty, right? And boy, are we seeing a lot of uncertainty lately. We're seeing it at the consumer level in the confidence surveys, but we're also seeing it in things like the manufacturing surveys. The Dallas Fed put out a really interesting survey of energy companies in the area. And everyone is scratching their heads trying to figure out what all of this means for their business. A lot of them are talking about, well, maybe we're not going to invest as much capital over the next year because we just don't know what's going to happen. Like, why would I start building a factory in one place if I'm not sure the tariffs are actually going to be around in 5 months or whatever? So uncertainty weighs very heavily, not just in the immediate term, but in the long term. And we're talking years and years and years. And Joe and I like to talk about one of our favorite examples of this is US housing. So in the aftermath of 2008, a lot of house builders obviously went bankrupt. There was a lot of capacity taken out of the home building market. And you could argue that even today, more than a decade later, that capacity hasn't been replaced. So, memories for this kind of stuff are actually fairly long. And so the capacity question is going to be a big one. How long will it actually take for us to react to some of these tariffs? These are huge projects, huge expensive projects, take a lot of time, take a lot of money to build massive factories, even simplistic ones to make sneakers or whatever. The other thing I would just add on to that is all of this is happening at a time when there doesn't seem to be what economists call a fiscal offset. So the government isn't planning on spending any more money to try to boost domestic industries, or at least we certainly haven't seen it yet. If you oppose tariffs and then said, well, we're going to send billions of dollars into the U.S. economy to target strategic industries, that could help. It would at least be a sort of cohesive economic plan, but we're not
a traditional conservative.
But we're not
economic
seeing
plan.
that. Yeah.
It's not a traditional free market conservative economic plan, but yeah, that would be at least something. But the thing that jumped out to me about that Dallas Fed thing that you mentioned is if there was a sector that is more Trump's base than that, I don't know what it would be, right? Like those folks, are most of the people that they interview, they talk to for that are going to be Trump supporters. And so if that group is saying that we are seeing uncertainty, we don't, we're going to hold off on investing rather than saying, oh, we trust Mr. Trump, we're going forward. And that is particularly alarming because imagine what people in more skeptical sectors are thinking.
Oh, yeah. It is, the energy industry is the heart of Trump's base in many ways. And the interesting thing about that Dallas Fed survey is, it's not just short-term things. Like there was one guy, he was a supplier for parts in the oil industry. And he was basically saying, well, we had one supplier ask us if we could move all our production to Canada, which is ironic because you would assume that's the opposite of what Trump intended. And one can only imagine how that supplier actually feels about all of this happening to his business. But the other thing to point out is there were people in that survey who are questioning the fundamental tensions in Trump's policy. So there is, again, this is all anonymous. You just get a vague idea of what these businesses actually do. But there was one business that basically said, Trump's plan for energy independence in America doesn't work with oil prices at like $50 a barrel. And we're seeing oil fall again today. You can't incentivize drillers to build new drills and produce more oil if the price is really low and capital costs remain pretty high. It's just not going to work.
I'm sorry, Tracy, that doesn't seem right to me because we have the liquid gold that's underneath our feet. And wouldn't they just be so excited that Mr. Trump wants them to drill the liquid gold? It doesn't matter what the cost is?
Someone has to pay for it to come out of the ground. It's not the government. I'm not sure it's going to be the businesses either.
Got it. Okay. Hey guys, we've been talking about our sponsor at Sol, the group that does the out-of-office gummies and the out-of-office THC CBD drinks products. And I mentioned I had my husband's 40th a couple of weeks ago, and we were using the Sol drink products, And, we had my man DJ87 there in the living room. And let me tell you, the people that were, not wanting to drink alcohol for whatever reason, were very much enjoying the sounds of DJ87, maybe more than they would have been with their Sol out of office drinks. Let me tell you a little bit more about them. Sol is a wellness brand that believes feeling good should be fun and easy. They specialize in delicious hemp-derived THC and CBD products designed to boost your mood and help you unwind. Their best-selling out-of-office gummies were designed to provide a mild, relaxing buzz, boost your mood, and enhance creativity and relaxation. The gummies come in 4 strengths. So, find the dose that's right for you. Choose from either a gentle microdose. Yeah, that's more my wheelhouse these days. Or perfect buzz, noticeable high, or a fully lit experience. And if you like their out-of-office gummies, as I mentioned, you got to try that out-of-office beverage, a refreshing alcohol-free alternative, perfect for summer sipping. So bring the good vibes and treat yourself to Sol today. Right now, Sol is offering my audience 30% off your entire order. Go to getsol.com and use code THEBulwark. That's getsol.com, promo code THEBulwark for 30% off. Hey, YouTube fam, if you want to support The Bulwark, the best way to do it is by becoming a YouTube Bulwark Plus member. The Bulwark is truly independent. We have no corporate overlords. We're not settling any dumb lawsuits with Trump. By joining, you help support our work, and you can get a bunch of perks right here on this platform. Ad-free content, bonus videos, live streams, and some emojis of me, which I guess some people want. So come join, come hang out, become a Bulwark YouTube Plus member, and I'll be seeing you in the comments. So behave. There's a news out today that the March job cuts jumped to the highest level since May 2020. You already mentioned the Dallas Fed analysis. Maybe give us a broader look at kind of like just, the indicators, the possible recession indicators and what people are seeing right now.
Sure. So if you look at a lot of the short-term moves today, oil would be a good one, right? Like oil is the lifeblood of the global economy still. And we're seeing that drop precipitously this morning, which means people expect less economic activity in the future. I imagine over the next few days, you're going to see some interesting things happen, like maybe more risk premium being built into U.S. Treasuries. We call it the term premium, and it basically means investors want more compensation for added uncertainty way out in the future. So again, that idea of long-term uncertainty really being here to stay. And then the other thing I would say is there are a lot of questions swirling around what this means for the Fed for the rest of this year.
Yeah, I want to get to the Fed next, but just some of the other things. The job numbers, like the number of openings, are going down. I think I saw you mention this in a newsletter. Consumer spending is slowing. You had a newsletter about the credit market, and you're a dispassionate analyst of all this. But when you kind of look at all that together, like the recession chances, like right now, April 3rd, compared to say, 6 months ago, November 3rd of last year, and has gone up a little bit, significantly.
Okay, so I am a dispassionate journalist, as you said, which means I have no opinions whatsoever. I am going to quote some opinions from other people, but
you have opinions. That is not true. You very much have opinions. I've seen your opinions.
All right, let me hide behind others' opinions for this one moment. I've seen people ratchet up the expectation for a recession this year to like 89%, 90%. I haven't seen anyone ratchet up growth expectations. That's not happening. And again, if you look at what was happening in November of last year, people felt pretty good about the economy. In fact, they were feeling even better, possibly because they thought Trump was going to win by then. And so you were seeing a lot of the consumer surveys come in stronger, particularly from Republicans versus Democrats. Now we're sort of getting into the reality of the administration. And I think the business friendliness of it is, in question, to put it mildly.
I think this is an obvious point, but it's just worth asking because, sometimes my Trump derangement syndrome takes over. There's nothing else caused this besides just the chaos he put into the markets over the tariffs, right? Like there's no other outside factor or, kind of cyclical, economic factor that is bringing this to bear, right?
Well, to be fair, I will say there were signs of the economy slowing, for the past few months. And you pointed out a bunch of the indicators that we've been seeing. So, that's kind of been happening a little bit. But what's really interesting about yesterday, and Joe actually made this point very well, both of us have been in finance journalism for a long time. We've seen a lot of policy speeches over the years, and we've seen lots of big ones that the market has reacted to negatively. But all of those have tended to be like crisis communications. You're in the depths of 2008 or the Eurozone crisis. You're saying this is going to be your emergency plan, emergency funding. The market doesn't like it, starts tanking. Usually the market is tanking because the crisis response is not enough. This time, it's too much, right? It's like a purely self-manufactured market crisis impact, which is extremely unusual in itself. And then the other thing I would say is it's really
unusual is about the nicest way to put it. Like totally self-inflicted market crisis.
Well, the other thing I would say that's really worrying for investors, and I think it's one of the reasons we're seeing such a strong reaction. I mean, Trump and the administration, all the professionals in that administration, they must have known that stocks were going to react very, very negatively to this. I mean, they moved the announcement till after the market closed, which is one indication that they were, at least they had the market reaction on their mind. They did it anyway, right? Which suggests if you're a stockholder or even a businessman, I mean, businesses fund a lot of their activity through the stock market still. The administration isn't really thinking about you that much, or at least they're very comfortable with inflicting short-term losses on you.
One of my finance friends sent me a picture of the NASDAQ stock chart, and I can't verify that he's 100% right about this, but he said that this is the largest 10-minute drop in the history of the NASDAQ futures. So even if it's in the ballpark, not great. To your last point there on the Trump thing, you've talked to folks that are kind of pro-Trump, that are supportive of the view. Is there any rational argument for this? Like, can they make a case that they're trying to weaken the dollar because they're trying to strengthen crypto, or is there any rational argument for what they did yesterday?
I think it's really, really difficult to make that case. I mean, I'll just throw out here, my dad's a Trump supporter, so I hear a lot of the talking points. The one that he's on at the moment is the market is overreacting. It's the globalist international investors' fault that this is happening, which, okay, blame it on someone else. That's a classic reaction when something blows up in your face. But at the same time, we are seeing this happen, right? America is losing its importance in the global financial system. One of the things that's been happening in the past month or so is we've seen European stocks go up by quite a lot. People are talking about the rebirth of Europe, the biggest moment in European history since the Berlin Wall fell, all because America is basically retreating from Europe, and it means Europe is going to have to come together, start spending a lot on defense, maybe start spending more on its domestic industry, funded by the government, I might add, not like the US, which seems to be stepping away from a lot of federal funding. And so that's going to create more economic integration, more growth, more togetherness, cohesion, whatever you want to call it. People are pricing in the idea of a how should I put it? Submerging America. We are seeing that in asset prices.
You did it, Donald. We've made the German military sector great again. It has its benefits and downsides. All right, back to what you mentioned earlier, the risk to Fed independence, because I am totally with you and Joe on this. I think it's underappreciated right now, and a potential kind of medium to long-term crisis risk on top of all this other stuff. So talk about that and what would happen if Trump and this administration does something to undermine the independence of the Fed.
Sure. So all of this is stemming from an action they took on the FTC. So it was kind of funny. We interviewed actually in DC, the FTC Commissioner Andy Ferguson, the head of the FTC. It was like a Tuesday night, and he was talking about how much he loves bipartisan opinion within the commission, how much he values it. It's very important. And then the next day, news came that Trump had fired the two Democratic commissioners at the FTC. And he had used this kind of special power to do it. That's now working its way through the courts. In fact, Odd Lots is cited in the lawsuit that those commissioners are now filing. And the interesting thing here, the relevance for the Fed, is if Trump succeeds in doing this, and if the lawyers fail at arguing against this in court, it could have implications for the central bank. It could mean that Trump can effectively fire whoever he wants at the Fed, a regional Fed president, whatever. That would give unprecedented control, at least in America, to a president over the central bank. And markets and investors, as a rule, tend not to be fans of a central bank that is not very independent.
Yeah, so we love catastrophizing here. So give us the catastrophic risk outcome of removing Fed independence.
Oh, man. Are you ready to be traumatized?
Yeah, we are. People that tune into this podcast come for a little afternoon trauma, actually.
Okay. All right. Well, I think the analogy you could look at is Turkey, for instance. That's a pretty good one. We've seen a sort of revolving door of central bank heads go through the Turkish central bank. They come in for like a few months or a year, and then they're out the door very, very quickly, presumably because they're not doing the things that Erdogan wants. Erdogan has been pushing for lower interest rates, even though inflation has been staggeringly high. And that's sort of the outlook, right? It's if you have someone in power who's pushing for low interest rates, but at the same time you have capacity pressures as a result of hypothetical tariffs, for instance, then you're going to see prices go up. The central bank, in theory, should be raising rates, but the combination of lower economic growth and higher prices, stagflation, is a difficult one for the central bank to react to be fair. But in theory, they should be raising rates, but the president wants to push them down. That is a recipe for, prices going up quite a lot.
How's the Turkish economy doing?
I actually haven't looked at it that closely recently, which again, we're talking kind of emerging market stuff, right? Like these are
we're comparing us to the types of things that are happening in emerging, capitalist, quasi-capitalist authoritarian states.
I think that's also the important thing to remember here. A lot of the U.S. investment case, the U.S.'s primary export is financial assets. We sell lots of stocks to foreigners. We sell lots of our debt, U.S. treasuries, to foreigners. That's been funding a lot of our business model. If the primary export is that, you have to talk about how important the rule of law actually is in this country, the stability. Investors investing in the U.S., they're not expecting, like a coup or the president to be controlling interest rates. They're expecting a very, normal line of proceedings, right? And instead, we're seeing all this uncertainty injected into the market and sort of the U.S. normality premium, being eroded.
All right. I want to do just a full catastrophizing episode on what would happen if that doesn't just get eroded but goes away here in this country, and we can do it another time. I appreciate you coming on a very busy day. Tracy Alloway, everybody check out the Odd Lots podcast and newsletter.